I didn't start my career with the aspiration to become an accountant. What I really wanted to do was become a professional rugby player. When I say office space, it was literally a chair and a bit of a side table.
Over 30 people and £2 million in revenues.
I remember walking into his office the very first day with like a suit and a sharp, like, you know, one of those thin ties.
Yeah.
And he looked at me, he goes, "How are you an accountant?" you know, thought that maybe I was going to be a little bit stuffy, you know, talk a certain way and so on.
Yeah.
So we just got on. I think sometimes when things come easy, you know, you enjoy what you do and you want to help. I think that really comes across in the fact that you don't really have to sell to anyone and people actually want to help you out.
How many people in a hub?
They've grown from 5 to 50 employees.
So today I'm going to be interviewing an exceptional accountant called Wes Rashid of Accountancy Cloud. Wes' journey is truly inspiring. We'll be hearing about his story, about how he's built his accountancy firm to now over 30 people and £2 million in revenue. So without further ado, let's get straight into today's interview with Wes. Hey Wes, how you doing?
Very well, thanks. Thanks for having me.
Oh, you're very welcome, very welcome. Now, Wes, you've been popping up on my feed for a while, so I thought, you know, I'll reach out to you and say, let's have a chat about what you've been doing, because I see in your journey and what you've done kind of aligns with some of the stuff that I talk to accountants about in terms of the most effective and fastest ways to grow and scale an accountancy firm. And given that you've done just that in terms of getting your firm to where it is today, I thought it would be good to hear about your story in terms of how you got to where you've got to today and what your thoughts are in terms of the profession going forward. So let's kick off with where it all started. Where did it all start for you in terms of starting your own firm? Let's kick off from there.
Well, I'm just going to dial all the way back. I didn't start my career with the aspiration to become an accountant. I did a sports science degree. I was facing a couple of pathways, you know, either be a teacher. What I really wanted to do was become a professional rugby player, right?
Okay.
The teaching route I really didn't want to do, and I wasn't good enough to become a professional rugby player. So in my culture, you're either a doctor, lawyer, or an accountant.
Yep.
Or a dentist. And I decided to go down the accountancy route. That meant I had to start from scratch, but I really wanted to do it. You know, did all 14 of my exams doing the ACCA route. Because I did well in my exams, I managed to get Grant Thornton, which was absolutely an amazing experience, and then moved quickly into management consultancy, as most people do when they qualify. And from there, one of my clients, Diageo, poached me. So I was working for them, part of that role. Got a great opportunity to start working and investing in startups as part of their ventures arm that they were creating at the time. And then I just got really immersed into the whole startup community. Obviously, people will know, you know, technology businesses and startup businesses have been a very exciting industry. When I started Accountancy Cloud back in 2014, there really wasn't much noise around them, to be honest. I could see that they weren't getting the support that they needed. I could clearly see there was a gap in the market. And hey, you know, I have two principles running a business. One is that I want to work with, you know, really, really cool people, you know, the staff that we have in Accountancy Cloud. And two, I just want to work with really, really cool and interesting clients, right? And so that's really where it all started. Accountancy Cloud was born nearly 11 years ago now.
Okay. Time flies, eh?
Yeah,
when
it
you're
does,
having fun.
yeah, absolutely.
So let's take us back to when you started, because clearly there must have been something going through your head. You're at Diageo, you're getting all this great experience. What gave you the impetus, motivation, confidence to say, actually, I want to leave the comfort and security of what I'm doing and set up an accountancy firm specifically targeted at tech startups? Now, I'm a big believer in niche. Did the niche idea come to you straight away? Was that something that you wanted to focus in from the outset? And was it done with intention that this is the right thing to do for marketing purposes, or was it just a case of I love working with these type of people and I want to add value to them from the outset? Because most people, when they set up an accounting firm, they set up because they want the freedom, they don't want to work for somebody else anymore, and therefore they just take on anyone and everyone to begin with, friends, family, through referrals. But it sounds like yours might have been a bit different. So just, if you can, take us back to that point.
It sounds like it. It really wasn't. I, like everyone else, when you're starting up an accountancy practice, I think there is a misconception that accountants kind of know how to set up and run a business, right? I mean, that definitely wasn't the case on day one. when you realize you've got like 165 things to do and you need to prioritize. So to honestly, right from day one, it was a bit of trial and error, a bit of experimentation, a bit of soul searching and figuring out really what the types of clients that I wanted to serve, who I'm passionate about serving as well. Now, to give you some insight into that, when we actually first started Accountancy Cloud, we were going to be just a general accountant. We are based over in West London in Green Park. I started the accountancy practice in a garage, but we can skip that. Our first office was based in Green Park, and we genuinely were just trying to get as many clients as we could on board. And that one of the reasons for that was it's kind of like a hedge against risk.
Yeah.
You figure that because there are so many SMEs that could need your services, that surely that strategy would pay off. When in fact, what it didn't pay off is the way that I thought, you know?
Yeah. Sorry, just taking you back to that, because let's not skip the garage. The garage is a good bit.
All right.
How long did you spend in the garage, and how long did it take you to move to Green Park? Presumably just you in the beginning, how quickly did the clients come on board for you to be able to then invest in office space?
When I say office space, it was literally a chair. Do you remember like the Regis Business Lounges back in the day? I don't know if they still do them, but all it was was a chair and a bit of a side table, and that was really it. So I was living in a garage really for the good part of a year.
Okay.
And I was actually quite happy with that, to be honest. I was actually really happy. I don't see it as a time or a bad experience at all.
Sorry, just on that. I like to delve into this because there'll be people listening to this that are just startup accounting firm owners, and just in their mind, when they leave, the motivation is just, I want to do something on my own. If I get to paying my own salary, I'll be happy. What was your vision? What was your ambition at the time? Did you just want to cover your salary, or did you have big ambitions of growing something much bigger than that?
It's a really good question. First of all, I don't have any kids, right? Pretty young, starting the practice as well. I thought I could create something that was going to be right for me. So possibly run a business that works for me. Truly and honestly, my vision was born out of proof points. My vision was born out of like the confidence of, we can do this. The vision of Accountancy Cloud was not born from day one where we said, it's what a whiteboard. One of those things. And it's like, we want to serve tech startups from day one. And we want to be the change maker in the industry from day one. I don't know, maybe that's just because that's the way I am. I felt as though I needed to prove something to myself before, the motivation to say, hey, actually we could be a number one player here. We could actually turn some heads. We can actually take a share in the market. We could be a really strong niche player. I think that kind of evolved over time, to be honest. So really my first objective was, let's just get to 250. Yeah. Let's get to 250, step by step, day by day. And I knew that I was going to work hard, really, really hard for the first two or 3 years or so. But as long as I enjoyed it, that's okay. And
how did you get your first initial clients to get to 250?
First client, we started a few startup hubs where I'll just come along and hang out. And I'll start to offer some free talks around accounting and tax. And that evolved into some referrals. One of those referrals came from a well-known accelerator called Wayra, who at the time were backed by O2 or Telefonica. And so we started to work with their cohort and some of their mentors. So that's essentially how I remember it. Sometimes you need to find someone that really backs you. There was a chap, Raj, who was involved on the funding side, who just really liked us. I remember walking into his office the very first day with like a suit and a sharp, like, one of those thin ties.
Yeah.
And he looked at me, he goes, how are you an accountant? Like, thought that maybe I was going to be a little bit stuffy, talk a certain way and so on.
Yeah.
So we just got on. I think sometimes when things come easy, you enjoy what you do and you want to help. I think that really comes across in the fact that you don't really have to sell to anyone and people actually want to help you out. So I was very grateful for that. Yeah, you referred a few clients to us.
Amazing. Cool. Talk us through your journey of from 250 onwards. How fast was that? Who did you start to take on? When did you actually make that transition to say, right, that's it, our messaging needs to be much more positioned towards the niche sector? When did that niche kind of come along? if it did at that stage. If not, then we can kind of talk about it later. Yeah.
I think the turning point is we started to work with clients where we felt like we were massively over delivering and for not much gratitude or, enjoyment really. Really good client, professional services business. Yeah, the founder wasn't easy to get along with, very short of the staff. I didn't really like that. As I say, I go back to the first principles of trying to run an accountancy firm. I want to work with really, really cool people that I enjoy working with. So very much culture first in our firm, and I want to work with really, really cool clients as well. And that means the people that are running them as well. As I say, we were getting referrals. They were mainly startups, tech businesses. You know what? Actually, this is a great turning point. It's a good lesson for us. We need to double down hard in the tech industry. There was probably myself, the guy called Pratik, who was running High Horizon at the time, Taz, who I would give a good shout out as well from Barnes & Scott. Probably us three that really specialised in tech. So there wasn't a lot of startup accountants back in 2014. So we figured, hey, look, there's a great opportunity ahead. We're doing some great work, some really cool clients. Let's double down on our niche. And that really worked because our messaging became very clear. I think our first website was, we do tech startups, full stop, only.
Yeah.
And that was it. It was like a one page, kind of a sliding website, not much blog content on there either.
Yeah.
But it was very, very clear who we were targeting.
Yeah. Amazing. Yeah. Music to my ears. Yeah. One of my most popular phrases is get clear on who you serve. And pretty websites don't sell, words sell. And in terms of just being really crystal clear, accountants for tech startups, it does what it says on the tin. Sometimes you try and be too clever with marketing, but ultimately it's clarity that works. And clearly, you found that worked for you. Even just saying that you serve that particular audience automatically gravitates that audience to you and repels those that are not in your audience. So it's kind of win-win. They see you as a specialist. You get the kind of people that you want to work with, that you can add real value to. Because when you're trying to appeal to everyone, you appeal to no one. So you've laser focused, you've found your niche. How quickly did that take off for you then in terms of, the tech startups? How fast did it balloon? How did you then manage that capacity in terms of building team and structure? Talk to me about that.
Revenue rise, we were probably doing like 200-300K a year. Recurring, pretty solid. Always a challenge. You're trying to ahead really of clients that were coming on board. So we're a practice based in London predominantly, so they're quite expensive resources as well. So you have to kind of look for that balance of trying to find people that have the experience, which there really wasn't much experience in actually working with tech businesses. They have entirely different business models. SaaS was kind of a new thing, online marketplaces, these sorts of things that are coming out of these tech startups. So actually finding the experience pretty tough initially, but we did find them. Obviously, it's expensive getting that resource as well. So we just kind of, I wouldn't say that we had a systematic process to begin with, but what we did do is try to find talent that was fairly generalized, that could get stuck in. So that pre-250 mark, it was very much like, can we get a whole bunch of people that are really excited about this industry and want to get stuck in on all things, want to get broad experiences. We looked naturally at, that we wouldn't want someone necessarily completely fresh out the bat. We wanted time to be able to coach them, bring them up to our processes. But when you start to get to, 10 people plus, you then start to have think about systems and scale. Practice owner, I was very much quickly of a view that, I didn't want to be the person actually doing the client work. I wanted to make sure that our staff was actually delivering the value instead of myself, so I could focus on things like strategy, I could focus on the vision aspect, bringing in the culture, the right team, ultimately building kind of the practice that kind of works for me.
Yeah, a lot to dissect there. In terms of the team structure then, what does that look like? What does it look like now? And then you can talk about how you got to that point, just so I'd like to understand something about that and talk about the fact that you're doing the full finance function stuff. Presumably everyone's on, using Xero or similar in terms of managing those finance functions. So how is the team set up at the moment for client delivery?
So everyone works in pods, or we call them hubs. Have a portfolio of clients that they work on according to their banding. So underlying that, we know their skills and capability based on something called an OKR framework that we've implemented into the business, where we can measure our North Star metrics, but also is a good measure for where people are at in their careers as well. Given that they know their banding, what they need to do, like each and every month in terms of revenue contribution, in terms of the tasks that they actually deliver to their clients, and in terms of service.
So just talk about that a bit. So hub, how many people in a hub? And
Five.
5 people in a hub, are they doing all so there's people doing the bookkeeping, VAT, accounts, payroll separate? What's the makeup of that within the hub?
We now have payroll separate.
Okay.
Worth mentioning, we set up our own team in India. We're not outsourced. It's actually during the pandemic. We set up a team, hired them internally, and then trained them to UK standards. So out of that team, they predominantly do sort of the work for the UK accountants. So the UK accountants are predominantly people that advise the clients, and they'll do the reviews. Payroll managers, they're based in India, so they'll support the UK team. To face off with the client now and again, we built some tooling for that, some tech for that, and stuff like that. But we're not going to go into that. Predominantly, that's the way it's structured. So you have the Indian team basically doing the transactional work, and then you have the UK team that are providing the advice and the high value work. But they're also helping with the reviews to make sure that we've got that quality control as well.
Yeah. What does that look like in terms of the reviews? Is it a case of every client gets management accounts, monthly, quarterly, updates, cash flow? What does that look like kind of in detail? And what
depends on scale and size. Yeah. If you've got a pre-seed company generating any revenue, there's not a lot to report on. To be honest, it's they want the essentials. They just want the compliance done. They might want a chat with an accountant. If you've got a company that has just raised some institutional investment, so over $1 million plus, let's say, they're likely to have some information requirement that the investors want to see. So there will be a set of management accounts that need to be prepared. Probably a finance call that goes into it. That might happen on a quarterly basis, possibly on a monthly basis if they prepared to pay for it. So it's one of those things where, depending on what stage the business is at, you can broadly guess the type of services that they require.
Okay. And how do you come up with your engagement prices, packages, fees? What does that look like, and what do they get within it? Are you using packages? Are you using a pricing system? What are you doing for that?
It depends on what service. We do R&D tax credits and fractional CFO as well. So I suppose in this context, you consider them as add-ons. Generally, they're plans, they're bundled services. And if they want to add more volume, say more employees or whatever for payroll, then that will increase the price. That just keeps things really nice and transparent. We try to charge on a subscription. But in terms of what that, the level of pricing or what we actually charge the clients, you're probably the best placed person to answer this question. But I find that, the market changes. The market changes depending on, the number of competitors that are trying to bottom feed you, or the relationships that you have perhaps with certain partners. We've tried to go really high and try to prove our value, so to speak. And then other times we've had to make a judgment call on whether or not we want to invest in this startup because we believe that they're going to grow to become the next unicorn and catch, extra fees off the back of tax advisory work or, fractional CFO work or other things that we can get off the back end. What we do always do, however, to the OKRs is that, we're looking at client fees. We're working in an industry where you might have startup, they might start off with 5 people, they might not have a product, and then suddenly they raise investment and they're growing their team to over 50. Right. And that happens in the space of about 18 months. Now, we're obviously not going to charge the same price for that. It does mean that we have to stay on top of pricing. So we always bake in these, what we call quarterly check-ins.
Good.
Or customer care reviews. And at that point, we all say, hey, volumes have gone up. This means that we probably need to charge you some more,
Absolutely.
We'll obviously give them the data. More often than not, they're absolutely okay with that. And and just work on that basis with them so that we're always reflecting the correct price.
Absolutely. And how do you do that? Do you have a system, a software that you use to come up with the price based upon certain variables?
Yeah, so we built our own practice management system.
Okay.
Helps us onboard and implement, more of our software kit to our clients in a really streamlined way, and then helps us measure the work that we do for them as well. I heard you're not a big fan of this, but we use timesheets. We have timesheets integrated to all of our tasks.
Okay.
It's the way that we communicate to our clients. It makes it really, really easy to measure. Then we kind of use that essentially as the basis for some of our conversations. We kind of package it up in a certain way. Our clients easily understand. I think they can understand, for example, if, they've grown from 5 to 50 employees. Obviously, we're transparent from the start. We've got to charge for that. Even some of the intangible stuff where, for example, we might be working on a set of management accounts, and perhaps that set of management accounts started off very simple and then grew to be some sort of consolidated account because they decided to move some of their business over to the US. It's these check-ins that really help us, determine what the right price is at the right time.
So is that all included in your PM software where anyone in your team can come up with a price based upon certain variables, or does it require the input from senior management, directors to input on price, or have you got the system set up so anyone in the team can price up a client based upon the movements in their size over time?
Sort of a bit of both, I would say. Like there are, say, like low-hanging fruit services where, you've got an accountant or a senior accountant's just saying, hey, it's £45 a month for an hour of bookkeeping, this type of thing. But, when it's quite specialised, like SEIS and EIS, advanced assurance, these types of things, we've got, 10 investors coming on board. Then we say, flick it up to one of the managers, and one of the managers will be able to speak to, our tax team to come up with a price. What we have to remember, certainly in our industry, I believe is, we're not necessarily sellers. We're an advisory firm. It's perhaps a softer sell than if we were just selling software and it's just like, this is the price, this is the only thing. Even though we can provide a price, there's always sort of that human element to it, I suppose. It makes it feel like that client is getting the value that they really deserve. And often they might come up back with a couple of questions before they actually settle on, let's go with that upgrade, or let's go with that bolt-on, and so on.
Yeah. Okay. So
do you find that? Do you find that yourself, or do you have like a systemized process where you just spits out?
Yeah, absolutely. I do have a systemized process in terms of, I'm a big believer in getting pricing out of your head because it's a system like any other, but a system that should capture the value that you create. So ultimately, we get paid for the value we deliver, and how we communicate that value to clients will determine whether we can get paid for what we are delivering, because ultimately the client, providing they can see they're getting value, will pay whatever price is less than the value they are getting. And that's the only equation there. I don't believe clients care about the time that we spend or the effort that we spend, just like we don't care about the costs of any supplier that we buy from, whether it's a cup of coffee or whether it's a mobile phone or whether it's a car or accountancy services. Nobody cares about the inputs, the costs, the effort that goes into delivering the service. All they care about is the outcome. All they care about is what they get. So how can we ensure that we are delivering value and communicating our value in the context of delivering them an outcome that they can attach value to? So be that more money through tax savings, be that stress taken away, risk taken away, time taken away from them. That's the value we are delivering. So we've built a pricing system that is not going to capture everything because pricing is always evolving, but clients want certainty at the end of the day, and having a subscription model that gives them that certainty to say, you have access to us whenever you need us. If we are truly the trusted advisor we say we are, then we shouldn't put clients off calling us for fear of getting a surprise bill. So the old model of charging by the hour, I believe, nowadays it's just, it's nonsensical in the day of AI where things are much faster to do than ever before, that clients aren't buying time from us. They're getting value from us. So how do we price that value and give them that certainty over what they're getting, and then give them access to us whenever they need us, but ensuring that we are taking a share of the value that we are creating and giving to them in the price. So it's a win-win for us and the client. So yeah, in my mind, we have a pricing system. So anyone in my team can price up a new client, can price up an existing client. It's all built into the model. So I don't have to get involved. It was the last system I had to implement to get myself completely out of the practice. There was client delivery was the first, and then it was pricing, and then it was sales. And the only one left now is kind of hiring, which I still do, or marketing. But ultimately, my move to get myself out was building these systems, as you know, for people to follow, and pricing was one of them.
So your guys will say, hey, the price is this and it's fixed.
It's
so
an
when you
involved
deliver
system.
the value, you're also talking about margin as well. So you a level of margin into that, and you know exactly what you're getting, even if you over deliver. Or
Yeah. So for me, it's not cost plus, because I said nobody cares about costs. So it's very prices don't come from costs. Pricing dictates the costs that you can incur to make a profit. Pricing comes from other factors. So we need to look at your positioning in the marketplace. And you do this very well. And I'm a big fan of niching down. So when you're positioned well in the marketplace, pricing will follow positioning. If you're premium and you're specialist, you're automatically seen as premium, and therefore you can charge a premium compared to a generalist. If you can charge a premium on the top end, it's all about positioning to get that price up. And then internally, you can then set up systems, because you've got the same sort of clients, you're delivering the same sort of work, you can drive efficiency. So the people and the processes that you have, because they're doing the same things over and over again, they become a lot more efficient. Each individual can do more working with the same sort of clients than they could working with generalists, where perhaps they are one day getting asked questions about superannuation for doctors and dentists, then it's SEIS, and then it's EU VAT for content creators, then it's buy-to-let queries. That's why generalist firms usually are overwhelmed, overworked, and underpaid, because they're trying to do all things to all people working with 57 different industries. Whereas niche firms, specialist firms, are a lot more profitable because they can charge more at the top end because they're highly positioned and specialists. And it doesn't cost them as much to deliver the work, or the rate at which they have to take on cost reduces. And that's when you get the higher margins.
I was thinking, as you're saying that, yeah, we are like in a bubble, with our practices and the way that it's kind of run, if that makes sense. And I totally appreciate there might be other businesses that might not be thinking along the same lines. So
absolutely,
yeah, really helpful. Thank you.
Yeah, there is hence I wanted to speak to you, because you're a new specialist, and the more that we can get out that in this day and age, in terms of my aim is to try and get more accountants to realize that if you don't want to be seen as a commodity, if you want to get out of that sea of sameness and not want to rely on referrals, and want to actually generate good profit and good margin and build a business that works for you and gives you the time, money, and freedom you want, then the strategy is to specialize. And of all the firms that I've worked with, and of all the things that I've done in my firm, specializing has had the biggest impact in terms of solving the number one challenge that firm owners have. I've worked with hundreds, if not, I've got over 1,600 accountants in my Facebook group. And I ask them a question when they join the group: what is your number one challenge? By far and away, 90% will reply, getting clients, finding clients, building, growing the firm. So we know the number one challenge for most firm owners is how to get clients. The solution to that is to specialize, because when you're not specialized, you're in a sea of sameness with every other accountant. And if there's nothing differentiating you from the accountant down the road, the only thing a client has to differentiate you on is price. And that's never a good thing, because it's going to be a race to the bottom. So I'm a big believer and very passionate about specializing, niching down, because it solves your number one problem. And if your number one problem is solved, then it knocks down all your other sub-problems of I'm working too hard, I never have enough time, I'm struggling with cash flow, I'm not making enough profit. All those sub-problems go away if you can crack that code of how to get clients on autopilot. And when you specialize and you deliver value and you put value out in advance, like your firm does and our firm does for content creators, you have that steady pipeline of clients coming in, which means that you can charge premium prices because you are the specialist and you're able to deliver value. People will pay it. they'll get a fantastic service because you are geared towards just providing so much value to that particular group of people. You've gone inch wide, mile deep into one particular sector. And therefore, anything they can ask, anything they might need, anyone that they need to be connected to, you form that ecosystem for them. So you're hugely valuable to them compared to a generalist. And when you're hugely valuable, you can and deserve to charge a higher price, and people will be happy to pay it. So back to you now, obviously. You said you got a tax team then. So apart from the hubs that you've got set up, so you've got hubs for presumably the ongoing recurring services. Then you've got tax separate. Is that right? And when did that come along? Did you bolt that on later on in your journey? At which point did you feel the need to have a separate tax team?
Our clients at least just want everything all under one roof. So it just happened really organically. You know, if you have a tech startup, they are looking to go and fundraise, they need a check or two from an angel investor, then, the tax advisory work is required in order for them to become, eligible for SEIS and EIS, which is a tax relief for investors. Naturally, that client is going to come to us and say, hey, you're our accountant, can you help with this as well? It wasn't something that we needed to actively market, but it just kind of like naturally happened. We had a web page for it. We would talk about SEIS and EIS. We would run some webinars on SEIS and EIS, these sorts of things. And it's the same thing with things like R&D tax credits, which is another service that is closely linked to highly innovative companies as well. I suppose for us, we were just talking about the same things that we do every day.
Prior to getting the tax team, were you having to farm that out to others, and then you realised that actually we could do this ourselves, and then you brought in the expertise?
I would say, yeah. I think we used like an independent consultant.
Yeah.
That chap was a guy that I knew. He was a former tax partner at KPMG. Had a really good relationship with him. I knew that he had ambitions to set up his own firm, so we used him for a while, and then start to get a couple of team members on board who could take on that work, and it became something that we can do on a day-to-day basis.
Yeah, another example of how going inch wide, mile deep opens up these possibilities that, like you've done, you've realized that actually the more you go deeper into serving that particular audience of tech startups and realizing that now the nature of what they do and who they are, they're going to be doing innovation, and therefore they need R&D tax credits. Initially, you start off with outsourcing it, but then you realize actually we're getting a lot of this and we can do this in-house and make money from it. Same with the SEIS, which happens because you've gone deep into this particular space. And it opens up opportunity for you and revenue growth possibilities, similar to what we've done with Capture. We started off with working with content creators. The deeper we went, we started to get requests for, we want to move to Dubai because we can work out there and create content. And we used to initially farm them out to third parties and then realized that actually they weren't getting a very good service. Let's look at doing it ourselves. We went, set up a company, and now we can do the whole shebang. It comes through just working much closer and deeper with one group of people. And when you do that, you become much more valuable to them, meaning that other people like them will find you more valuable as you've gone deeper into that space. And the deeper you go, the harder it is for others to follow. And therefore you swim out of that, compare, the red ocean and the blue ocean, the red ocean of everyone fighting over the same business, the generalist space. And you can move on into that blue ocean where you can kind of become a category of one, where there's fewer competitors. And because you've gone deep into the space and really understand and working with your clients on a much deeper level, you're able to charge the fees you want because you deserve it. You're providing value.
What I will say about niching down there, and I think it's important to note, because we've niched for 11 years. When you do niche, generally, let's say you get well known in the influencer and content creator space, you tend to have this, suddenly you become the one that they want to go to, which means that actually winning work becomes very easy. And that's great when certainly in the early stages, if the market doesn't have that many competitors. What we've witnessed sort of over the last 11 years is we started off in that position and we established ourselves very early on. Probably harder potentially for new entrants that want to market themselves as startup accountants, because now 11 years on, or nearly 11 years on, running Accountancy Cloud, there are hundreds of startup accountants that are all saying that they're specialised in this space. So it does, to some extent, mean that when you're talking about value, you know, the levels of value that we're delivering 11 years later is actually probably more if you were to measure it in the first few years, because back then it really truly was a niche, and now we've got a lot more competitors. Some of those competitors will try to probably go against some of your advice and try to charge very, very low rates. Some of them might be 1 or 2 man bands, so who only want to build a portfolio up to maybe 20 clients. So they're prepared to go really, really low. How did we try to navigate through that? And really, it was just trying to deliver more value. You know, at the end of the day, create more opportunities for us to position ourselves as that trusted partner. I totally get your point. I agree with it. So on the other end, it's that whole niche of, oh, what's the new shiny object? Let's go to them. Yeah. And in the tech industry, it's very much like that. I hear it's very much the same in, say, media or film, for instance, or production. You know, when the new thing comes along and they're seemingly offering something different in the niche, everyone flocks to that, you know? Yeah. I think it comes down to, can you deliver great work for clients? You know, ultimately, are they happy? And if you can continue to deliver value, you know, you retain those clients and probably win some more work off the back of it.
Yeah, absolutely. Yeah, there's no doubt that initially you start off, and as you do well, you spawn others thinking, oh, look, they've done really well, and therefore we want to set. And I've noticed the same already. There are lots of firms setting up now, say we want to market to content creators, which is going to happen, but that's fine. But I know that we've been doing it for longer, so the amount of value that we can add is a lot more than a newcomer can add. Like you've been doing it for 11 years. So the whole point is you go inch wide, mile deep. You've gone deeper and deeper and deeper into that space. So it's still going to take a long time for people to catch up. So you're delivering genuine value to that marketplace and to that specific group of people that takes a long time to develop over time. And ultimately what we do is it's a very trusted service. Like, it's still, when you get to that critical mass that you're at now, you know, you're 1 million, 2 million or 1 million plus, you know, the referrals start to come much quicker, much faster. So you don't have to do much organic because you've got enough critical mass for people to talk, because you are genuinely delivering great value to that particular group of people. And then as you've now spawned into creating communities and bringing people together, again, you're able to do that because you've got contacts in the space, you've got enough clients in the space where you can do that kind of thing, provide value by bringing people in that same space together and become known as the facilitator, the expert in that space. So yeah, I mean, feel free to talk about that now in terms of what you're doing with the community that you've got set up as well.
So we set up on the 10th year anniversary of Accountancy Cloud, an all-inclusive community for underrepresented founders. So I am an underrepresented founder. So is my co-director, Asima. And yeah, over the last 10 years, we've been working on programs and accelerators, right, that were supporting underrepresented founders, whether that be, you know, the Black Founders Program that Barclays Eagle Labs runs, the Funding Readiness Program with Capital Enterprise, and Female Founders Initiatives. So a whole host of programs where we were delivering masterclasses, just free content. 10th year anniversary, how can we celebrate, you know, the 10th year anniversary of Accountancy Cloud? And we figured, well, why don't we create a community of our own? That's what we did. We went deep into my network. I knew someone that worked at HSBC Innovation Banking, and I said, hey, we're thinking about running an event for underrepresented founders. Do you think you guys would sponsor it? And he turned around to me and said, no chance, but I'll introduce you to someone in my team who works on strategic partnerships. And I kind of pitched the idea, you know, literally an hour after our call. She was like, yeah, I'm in. Really love the idea. And that's really where it all started. We haven't put a lot of our marketing effort into it. We managed to run, I think, it would be our 9th event next week.
Cool.
And we have a community of over, 1,500 underrepresented founders within there. It's something that, we believe is, impactful. I think it shows that obviously we're very connected within the whole tech space. And if you look at the statistics of underrepresented founders getting funded, they are stark. It's crazy. Less than 3% of underrepresented founders actually get funded via venture capital, which is absolutely incredible. So we can help. And through structured events kind of high impact, have great speakers and have great content, but also trying to put on some no agenda social events so that underrepresented founders from all walks of life, whether or not, you're Black, Asian, Middle Eastern, female, LGBTQ, it doesn't matter, all under one roof, just letting off some steam. And sometimes we forget, as entrepreneurs, it's all about, the growth. It's all about trying to move forward and whatever the next milestone is. And sometimes we forget there are other founders just like ourselves that are going through similar challenges to yourself. Sometimes it's great to connect with other like-minded folk as well. So if I can do that through work, I figured that's what I would do. So yeah.
Amazing. No, fantastic. That's a great initiative. And no doubt that's hugely impactful to the community that you serve. And ultimately, you being seen as a facilitator and the expert and the connector in that space will ultimately help Accountancy Cloud going forward. So as we wrap this up to bring it to an end, what do you feel are the biggest opportunities and threats facing the accountancy profession as we speak?
Biggest opportunity, I would say, is that you can shape a business however you want. So for me, it was very much like, can we build a really great culture within our business? If you are able to focus on something that you love or what you want to do for your business, I think everything else will come, right? So you own and control your own business. So do things that really make you happy, do things that are going to give you some enjoyment, and hopefully, you'll become a very successful practice, whatever your goals are. I think more broadly, sort of market-wise, a lot of accountancy firms, and when you go to some of these shows, they talk about AI as an opportunity, how you can implement technology, and that can impact many aspects of accountancy, from commercial and pricing through to the actual workflow element of it as well. How you can be more efficient as a practice, or perhaps be more advisory, because now you're piecing together fragmented data sets into consolidate reports very easily. The AI is effectively doing it for you. That's probably it. One is, as I say, the mindset. So you've got the opportunity as an early stage practice owner. So I don't know the stage of the audience, but presumably they might be starting out, or they might be first or second year or something along those lines. And then the bigger opportunity, or the market opportunity that a lot of accountants are talking about, is the technology piece. A lot of noise out there about what you should do. I mean, I'm not talking about like practically how you run a practice and stuff, but like as in the profession, there just seems to be a lot of change all the time, a lot of regulatory change. I think obviously you need to stay up to date with legislation, but you are your own person, decision maker. So I think just trust yourself from a mindset perspective. And then from a risk standpoint, if you go to some of these shows, they talk about things like private equity. They talk about how there's a consolidation in the whole market, and that might affect sort of independent practices, because these firms might be sweeping up kind of other accountancy firms or other clients. And again, there's the technology piece, where there might be a potential threat to the way that people run their business and the way that employees then utilize these tools as well. So not very good answers there, but I am literally riffing.
No worries. There you go. No worries. No, that's fantastic. Thank you very much for sharing your story, Wes. Certainly been inspiring. Hopefully it's given some food for thought and some value there to the audience. So thank you once again, and long may it continue to keep doing what you're doing, Wes. Thanks for sharing.
Thank you very much.